So, before we start, let me tell you a story. This is me, and this is my brother Sam. We both have different perspective about money, trading, and investment. Many years ago, when we were still hustling, I was working on the building sites, and he was working in a bank. That means he was making more money than I do. We share a lot of similarities on our survival instincts and making money, but there is one thing that separates us the most, and that is risk. I am a full-time risk taker, but my brother Sam, he likes to play it safe. But money is never safe anyway, although I started out very bad in taking risk. In the beginning I was gambling. I wanted an overnight success. You know those things every typical gambler will dream of. I was waiting for luck, but luck never came through for me. Everything was as clear as chasing the wind. I realized that I was making money, but always broke. I was a brokey. My brother Sam was winning. His method of playing it safe was working. And I, the risk taker, I was heading into poverty. I had to sit myself down on a Saturday morning, and I told myself that even if I wanted to take a risk, it must be something worth risking for, something I could have much control over. And after a few months, I discovered crypto. It was in the bull run. Everybody was an investor. You don't even need to know how the market works for you to make money from the market. Crypto was at its early stage, not like the big figures you see right now. I was making so much money that at a point, it felt like I was selling drugs, to the point that I was now making more money than my brother who was working in the bank. And the sweet part of everything was that I was doing everything from home with so much freedom. No boss to control me. No one to tell me what to do. Everything was based on my terms and condition. Now I was winning. The risk taker was winning. And my brother, who was playing everything safe, was now beginning to see things from my own perspective. He now understands that money not put to work will quickly slide out from the hands of the owner. Not long before then, he was sacked by his boss. He was working for a man. He decided to join me to trade the crypto market and also risk some of the money he has saved from his salary. But then it was too late. The market came crashing. Those whom the bull run made millionaires were almost going back to square one. Crypto was no longer a bed of roses. Only those who had the experience of trading could survive. This was no longer a time for only investment. It was time to trade, time to put in the work. But the crypto market is very slow when it comes to day trading it. And that's when I discovered Forex trading. But the Forex market in itself was a whole different environment on its own. And we will get to that soon as we progress in this video. There are two ways of trading, investment and leveraging. And the both of them are very different from each other. Beginning with the investment. Investment is one of the easiest and safest way of trading the financial market and multiplying your money. They involve a very low risk and great return on the long run. This way of investment is the type that Sam loves and very interested in. And this is not a new thing. This has been in existence for a very long time in human history. In fact, in one of the books of the Bible, containing the wisdom of a great ruler, King Solomon. Ecclesiastes chapter 11 verse 1 says, and I quote, "Invest your money in foreign trade, and one of these days you'll make a profit." Investment is a safer and logical way of gambling, and when you invest, you are betting on a company and believing that the company will do greater in the future and increase in value. And as they increase in value, the money you placed in the company will also increase in value, thereby making you a profitable trader. So it's more like you own a part of the company. And as long as you have a share of that company, you are like a little CEO of the company. And the day you take your money out of that company, the company will crash, depending on the amount of money you have placed in that company. And as other people invest into that company, the value of the company will also increase, and so the amount of money you invested into the company. Also depending on how much you invested. So here is the catch. You are going to be sharing with the companies rising and falling. If the company falls after you bought their stocks, the money you placed into the market will also reduce, but if the company's stock rises, the money you placed into the company will also rise and make you profits. But when you are investing, everything boils down to the amount of capital that you started with. To make money with investment, you will need to start with a very large capital to make higher amounts of profits. So, if you invest a very little amount of capital, you won't be able to make much profits. The financial markets where you can invest in includes markets like the stocks market and the crypto market, but there is another way of trading called leveraging. Leveraging is the act of using borrowed money to trade in the market, amplifying your capital to make bigger profits, and at the same time, bigger losses in the market. And the major market for leverage trading is the Forex market. Leverage trading involves a higher risk than investment, but it has a higher potential of giving you faster profits in the market. So with as little as $100, you can be able to amplify your account up to $1,000 or more and be making $1,000 worth of profits. But when it goes against you, you will be making $1,000 worth of losses. Unlike the investment type of trading, where you can buy a stock and hold it for years, riding through the highs and lows, in the leverage market, you can't do that. If the market goes against your direction, it will get to a point where it liquidates you, and you are taken out of the position, thereby losing your money forever. There is no hope of it gaining value anymore. It is gone. So basically, when you are trading a leveraged market, like the Forex market, you make money by predicting the direction of the market. You win by predicting the right direction of the market. So when you predict that the market will rise and the price rises up, you will make money from the market. If you predict that the market will fall and the prices of the market falls, you will also profit from the market. But if you predict the market to fall and the market rises up instead, you will lose your money. And if you predict the market to rise and the market moves against you and fall, you will also lose your money. But all these can be avoided if you know how the market really works. You see, that is why I like the Forex market, because you can take advantage of the true movement of the market, unlike the stocks and the crypto market and other investment trading markets. You can only take advantage of the rising of the market and make money from it. But knowing when the market will rise or fall, the exact time it will rise or fall, and how long it will keep rising or falling, is the reason why a lot of traders spend so much time and money and energy trying to analyze the market in different ways, using different tools and strategies, looking at the market from different perspectives and with different psychologies. But all of this boils down to one thing: to understand where and when the market will rise or fall. And in order to analyze the market correctly and make money from it, we make use of two major tactics in the market: the technical analysis and the fundamental analysis. Technical analysis involves the use of technical drawings in the market, such as the trend line, the horizontal line, the Fibonacci, and a lot more. It also involves the use of indicators, like the moving average, the RSI, and more. To analyze the market and know the exact direction it will go to while trading, when using technical analysis, traders believe that history always repeats itself, and they believe that if a significant price movement happened in an area before, it is most likely to happen in that area again. Fundamental analysis involves the act of analyzing the market based on financial news reports and the various events happening around the world that may cause a significant price movement on the chart due to sentiments like fear, greed, and doubt. In order to benefit from fundamental analysis, a trader must always stay up to date with the latest financial news reports happening in the market that will actually affect the price movement. The one I use the most is technical analysis. Technical analysis helps me to think more logically and gives me the best perspective of the market. Although there are different ways of using the various tools and indicators available for technical analysis, and we have theme in this channel, the one I like to use the most, that makes me more than $19,000 a week, is the horizontal lines. And when you're using the horizontal line as a tool to trade the market, you are trading a strategy called support and resistance. When you're trading the support and resistance, you are basically taking advantage of the long-age trading quote, which says that history always repeats itself. So it starts with 2 or 3 price movements, rising or falling from the same spot on the chart. So you mark that area with a horizontal line and wait for the market to return to it, believing that when the market returns and touch that area again, it will rise or fall, depending on your target. Though this strategy can be traded in its simplicity, but it's better when you understand the concepts that surrounds it, the particular time we expect the market to rise, the level that the market will rise to after touching an area, and where to place our risk management to avoid losing more money if the market goes against us. And in this video, you will be learning all of that and more. But before you watch the video, make sure to subscribe to our channel if you want to become a successful trader fast. I will see you there.